Hello guys, it is Alex from Investary, and this is part 2 of the Apple presentation analysis. So let's start from where we left off. We were talking about the revenue number crunching and we went through that. So there's several situations that we may, this is our analysis, what can happen. We can see a lower priced product line with either, the iPads, iPhones to make Apple have an edge over competition, because we've seen more competition with obviously lower priced product, smartphone and tablet products out there. So this will make Apple more competitive towards foreign markets. But the problem with this is we're probably going to be seeing decreasing margins from this if they choose to do that, because of that low average. That cost structure, hopefully, I think would still be staying the same. Now, if it's lower, then obviously it wouldn't impact the margins too much. But this may impact revenue. Now, obviously, we don't know the clear details about that, but we do think it will hurt revenue in the long run. And also, the volume. If they're trying to do this lower price product, are they trying to make it up with higher volume? That's again something to keep in mind of. The one thing that we want to keep in mind is the 19.3% market share of Apple against the 59.5% Android market share. So if they want to increase that market share, if they produce a lower priced iPhone market, that's going to increase their market share. That goes for the iPad as well. So it all depends on Apple's intentions. Also, in our case too, is if the prices remain the same. We can see a decline in sales and revenue decline, and this may be dangerous because it really depends on what features they have in their new products. If it's not really compelling, that's not going to attract new users or the existing users to get into that new product. The profit margin can still decrease from that 37.5% if labor goes up in China as well as manufactured parts. I think that is still an area of concern, and that may be a reason why they do not want to keep the prices. They don't want to lower that price that they're at. Fundamentals, again, $140 in cash. $140 in cash, P ratio about 10 right now, and the revenue is expected to grow at a 17% growth rate. No debt for now, but once that buyback program starts picking up, we're going to see more debt that's going to be picked up, but that should not be an area of concern for investors. On the product line, right now we're seeing the iPhone, iPad, MacBook. That's probably going to be refreshed in the upcoming season. And there's always rumors about, the iTV, iWatch, and the music radio to compete with Pandora. I won't get into that, but we'll see what happens when they actually announce it. The Wall Street consensus is still very bullish on this company. We've seen the mean price target of $543, which is actually almost $90 above where the price is right now is, and so it's still a buy. 2.0 from a 1 to 5 scale. It's still a very bullish Wall Street consensus, but we do want to be wary of these numbers right here. We have David Einhorn in the stock. He increased his position just recently. He owns, as of 2012, end of 2012, 1.3 million shares, and he is the 75th largest shareholder. He sued Apple over the cash, and the dividend, you can sort of thank him for that. He was the one who brought up the attention of what Apple should do with the cash, because they have so much cash that's just sitting there. So he is definitely a huge part of the company. So there's arguments on both sides of The pros and the cons. We see a low evaluation in the sector. That's the argument here for the pros. Low evaluation, now you have high dividend, cash in hand, sales are increasing, still plenty of expansion room for expansion in China. The buyback program is initiated. They still have a competitive edge over their competitors because they're still one of the tech leaders, and they had just their largest quarter in history. But obviously you have the cons on this side: self-cannibalism, eating away their own market share, which is undoubtedly still happening, but from what Tim Cook says, this is a small portion of the decline that they've seen. And people may not be compelled to upgrade their iPhone and iPads anymore if they don't see new features that's coming out. Innovation, that's a huge key that we talked about. Margins, sales declining, the macro factors of what's going on in China, heavy reliance on the iPhone, competition, uncertainty, as you know, the leadership has really, Tim Cook is completely different from Steve Jobs. That's all the negative side. So we present both sides of that argument. What we want to talk about now is if Apple is a viable investment, because the decrease in Apple growth we believe, is already priced in the stock. With the buyback and dividend, they at least have the attention of the value investors. But there's areas of concern for the company. Huge reliance on one product. If there's going to be innovation, execution, macro factors, we've talked about that. Corporate sales, there's been huge growth in corporate sales. Is that going to continue? New businesses, all of that is areas of concern. But from what we think is that this is going to be a great long-term value company. While the future is uncertain, the future product line and decisions, we believe that the management team can execute on that. And they did set a floor price with the buyback plan. We think that the floor is about $400. It's not going to be going back to that price with such a compelling buyback, and that's a huge sign of bullishness. The stock price is relatively cheap, and record quarter, like we've mentioned. Margins, while it's decreasing, they are getting back to realistic terms, and that's something that's really important. No price target in terms of where we think the stock is going, but we do want to say that we think in the long term this is a really good company to get into. Over the long term, we think that Apple is going to continue to bring value onto the table, so that is why we have a great long-term viewpoint. So we believe the company has a lot of uncertainty ahead, but it is already factored into the price of it. The company is extremely cheap if you look at it from a rational point of view. Just the cash in hand, and compare with other investments out there, with the whole market going up, I think that this is a very compelling stock to really look at. And you get this existing product line. If they produce new exciting products in addition with their new existing product line, it's going to be trading much better than it is now. We want to hear from what you guys have to say, thoughts, opinions, feedback. And we do want to disclose that Investary Group does have a long position in Apple. Our position is subject to change. As you know, the uncertainty of this company is definitely an area of concern for a lot of investors. But please do your due diligence before you make any investment decision. That is something I do want to stress. Feel free to comment and add new or additional information. We'd love to hear from that. And here is additional information. Follow us on Twitter, like on Facebook and check out our website. We have a lot of great content. And definitely subscribe to our channel. I forgot to add that. Subscribe to our channel. And feel free to comment on another stock analysis that you want to see. So thank you guys for watching this video, and we hope to see you guys in the future.